Welcome to Forex Trend Atlas. Each weekend, we focus on the big picture, from the quarterly down to the daily charts, using well-known technical tools. The higher time frames, like the quarterly and monthly charts, usually change slowly. So you can also check my previous videos for reference when needed. Now, let's begin with this week's outlook. Here is the weekly chart of EURUSD. On this time frame, price continues to move within an ascending channel. The pair touched the upper boundary in July and again in September 2025, and has been consolidating since then. To the upside, the September high around 1.192 remains the key resistance level, but given the recent loss of momentum, we should stay cautious about a short-term correction within the broader uptrend. To the downside, the notable support on the weekly chart is around 1.12, which aligns with the 38.2% Fibonacci retracement of the move from the start of the year to the July high. A decline toward this area remains a scenario to keep in mind. Now, let's move on to the daily chart. Now, let's take a look at the daily chart. Here, we focus on recent price action. Although no clear trend is visible, price had been making lower highs and lower lows since the September 17th high at 1.192, forming this red descending trend channel. Last week, price broke above the upper boundary of this descending channel, and also moved clearly above the key resistance at 1.159. Even so, no strong directional trend has appeared yet on the daily chart, and for now, we view this timeframe as being in a neutral, trendless phase. In summary, EURUSD appears to be in the later stage of the weekly uptrend that has continued since early 2025, while the daily chart shows an unclear and indecisive structure. For long-term investors, this remains a difficult phase to take positions. Let's stay calm this week, avoid being swayed by short-term volatility, and keep the long-term trend structure in mind. Thank you for watching today's analysis. If you found it helpful, please subscribe and click the like button. Let's continue to approach the markets with patience and discipline. See you in the next outlook.